All right, guys and gals, back to work. Boy, the FOMC is out. The rate cut is in. And man, these charts right now look great tonight. Get some great trades setting up for tomorrow. Now, markets were messy in the wake of the FOMC announcement this afternoon, but I'll tell you this one really big clue on the charts in front of us that are kind of tipping us off to where I think the winning trades are waiting for tomorrow. In fact, I have 3 trades on my radar for tomorrow. I'm going to cover all my favorite trades, of course, in this video tonight. I want everyone to have a roadmap to make some money as well. So charts are all prepped up. Glad to have with me. Enough of the intro, though. Let's go make some money on Thursday morning, what should be a fantastic day tomorrow in our trade room. Nasdaq triple Qs are all ready. The E-mini and the SPY is ready. I have 2 I think pretty important clues right now on these charts that are tipping us off to where the winning trades are waiting for us tomorrow. One of those big clues is right here on these hourly charts. It's very easy to see we're bullish overall on the S&P and SPY, bullish overall on the Nasdaq and the triple Qs. Now, I like to use these 60-minute time frames to give us the best overall directional bias, almost like a filter for us for finding trades tomorrow. But the one thing this 60-minute chart doesn't do, it doesn't help us time the entries. It's one important clue, bullish overall on the hourly chart, but I have another very important clue on some faster time frames, some tick charts that will help us time the best entries, because timing the entries is the most important part. But before we talk about entry timing though, let's talk schedule for tomorrow, because tomorrow's a pretty busy day. 2 news events on my radar for tomorrow. The first one is the Philly Fed Manufacturing Index at 8:30 Eastern Time. That's something I'm watching tomorrow, but I would imagine the biggest potential market catalyst is that home sales number at 10 o'clock Eastern Time. Whenever we have Red Star news at 10 o'clock Eastern Time, I always want to pay attention, so be aware of that tomorrow morning. 8:30, Philly Fed. We got some jobless claims in there too, but Philly Fed at 8:30, and I would imagine the big catalyst tomorrow, the home sales number at 10 o'clock Eastern Time. Keep those 2 on your radar, especially that 10 o'clock shock, as we call it. But back to our charts though, because it's good to know when the news is, but we don't trade news. We trade the charts, the patterns we see in front of us. Let's dive in and talk entries for tomorrow. I mentioned earlier that the 60-minute time frame gives me a nice overall bullish directional bias, but it's not going to help us time the entries for tomorrow. Let's use some tick charts. Tick charts make entry timing, make pattern recognition a whole lot easier. This, of course, is a 7,000 tick chart, all the time frames you need in the upper left-hand corner. And in case you're watching for the first time right now, welcome to the channel. This, of course, is the 21 EMA. It's pretty much the only indicator we use to find lots of winning trades each week. There is one really important clue on this tick chart, and that is that big, beautiful, well, beautiful, I guess, might be a relative term. It's pretty messy this afternoon, but a big, beautiful trading range right in the middle of that chart. Now, why are ranges so important? Well, first of all, ranges act like magnets. That's one thing. And ranges love to rotate down, up, down, up. Usually they rotate about the same amount above as the same amount below. So let's put these all together. Put those 2 clues together. We are bullish overall on the 60-minute time frame, and we're anticipating rotation back and forth. So knowing that is the case, I have 3 trades I'm watching on the S&P. This will also apply on the Nasdaq. For example, one of my favorite trades for tomorrow is I would love to complete this pendulum. We call these pendulum swings in our trade room. I would love to complete that pendulum swing rolling lower. And then, as mentioned earlier, we're a bullish market overall. We're at the low of that range. A lot of support levels down here. This is a horrible place to be a seller, right? Not in the bullish overall bias there. I'd like to buy there, but you know what? I'm not going to use some indicator to do that, and I'm sure not going to blindly buy down there because it may keep on going a bit lower. What I'll do is, my favorite way to time the entries on these is to use what I call a failure pattern. Now, failures are very, very simple. If I can get some bears coming in, we assume these are rookie sellers down here, right? Let's trap those bears in, let them try twice, because think about it this way. If you're a seller and you're stuck short, where's your stop? Your stop is sitting right about there. I can buy into their stops. See, that's a much easier way to time the entry, right? Not looking for divergent signals or moving average crosses or trying to blindly buy. Let those rookie bears, let them dig their own grave down there and just buy right into their stop losses. Now, that's called a failure pattern. Let me teach in our free video classes. Now, where does the market want to go? The market wants to rotate back up again. Okay, so second trade I'm watching for tomorrow is always the follow-up trade. It'll always be the trap trade. Now, trap trades are very simple. Higher high in price, and I'm going to get right below that prior swing, right? That prior swing. Makes sense on that one, right? So again, we run lower, we trap the bears in, we don't pick the bottom, we squeeze those stops, and as we're going higher here, we're looking for that next add-on entry, higher high in price, and a trap right below that low. Now, we know the market wants to take out that high, right? It wants to take that high out. Now, as it rotates higher, what's my problem? I'm no longer buying low. These are pretty easy ways to make money down here because you're buying nice and low. You're buying off areas of support. But as we start going higher here, now we're not buying very low anymore, right? So how do we buy low? Easy. A two-legged pullback. Now, two-legged pullbacks will quickly become one of your favorite trades. Here's how they work. I want to get underneath the 21 moving average. That's one leg, right? Two-legged pullback. Second leg will continue. Now, in our free video classes, we talk a lot about measured moves, right? A, B, C, D. When I think about a two-legged pullback, I think about a measured move that goes a bit too far, a bit more than a measured move. Now, like I mentioned earlier, I'm not going to pick a bottom on this, right? I'm not going to blindly buy that area because it may keep on rolling lower. If it does, I'm going to talk about what to do if it rolls over here in just a moment. What I'd like to do though is I'd like to use that same failure into pullback combination. See, markets are fractal, right? So I can use the same pattern combination over and over again. In this case, trap the bears in, use that two-try failure. And the reason why two tries there, because I want to trap in those bears and squeeze those stops, right? That makes sense, right? If you're caught short, you get stopped out, you're buying your way out. Easy way to make money with a failure pattern. And then again, as we go higher here, it'll be that bear trap, right? It'll be that higher high in price. We call these trap patterns, of course, in our free video classes and in our trade room. Now remember, if you want to make more money, hold on to your winners longer. You know where the market wants to go now. Mark below, mark above. That now is where targets are waiting above, right? So again, three favorite trades here for tomorrow. It's a failure pattern off key levels of support. It's a trap follow-up, and then don't chase after it, right? Look for that two-legged pullback a bit more than a measured move, right? And we look for that failure trap combination. Now, later on in the video, I'm going to talk about if we wind up and be able to short this thing back down again. We'll talk about some shorts off the top of this later on in this video. Before we do that though, let's slow down for a second because I know most of you guys and gals watching right now, you're already making money with these. You know how to trade failures and trap patterns. You guys know we love these two-legged pullbacks. But if you're watching for the first time right now, this might be a brand new language, a brand new strategy for you to learn. Don't you worry though. I teach this entire roadmap. I talk about ranges and two-legged pullbacks. I have hundreds of examples of all these entry patterns I'm talking about tonight. I teach all of this in our free video classes. Everybody loves our free video course. I'll put a link up top for you, upper right-hand corner. Grab that link that popped up right there and take that free trading course, because in that free video series, I will teach you a simple trick we use in our members trade room that tells us where the winning trades are going to be each day. More importantly, I want to help you start timing better entries. That's the key to making money. I'll teach you 4 my favorite entry patterns, failures, traps, and a hell of a lot more. I cover the entire roadmap in that free video course. Guys, the markets are way too good right now not to be making consistent money. If you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, hit that link that popped up there. Take that free video course, learn the roadmap. Perfect for anyone who is serious about making money in these markets. And also, too, keep in mind, too, I'm going to put all the important links we talk about tonight in the description of the YouTube video. I would definitely recommend start first on the free video classes. Learn the roadmap, start making money on your own. Don't forget to, we trade together every morning, 8 o'clock Eastern time in our trade room. You'll love that. I'll put those links in the description of the video. And also too, I post a lot of updates, charts, videos, mindset stuff on Twitter, or X as they call it these days. If you're on Twitter X, give me a follow. You'll love the feed on Twitter X. Again, all the important links you'll need in the description of that YouTube video. So, but again, start first though on that free video course, and that will give you more examples of trapping bears with failures, adding more on bear traps, and then as we run up, getting those two-legged pullbacks and picking those beautiful bottoms on that rotation. Now, in a moment, I want to talk about if we go higher here, right? Because we may not go lower first. If we go higher here first, that changes the dynamic quite a bit, because then it's a failed rotation, right? Failed rotation is a really big clue. We'll talk about that in a moment. Before we do that though, let's talk about some variations of this, because you know what I want. I want to run lower. I want to trap the bears and squeeze stops, right? But you know what? There might be so many buyers down here. We may not get that chance to try failure, squeeze stops. This thing may just rip right back higher again. Now, when that happens, we most often see something like this. If it bounces hard off that low, I'll be looking for what I call a V-bottom reversal. If it V-bottoms off that low, it almost always begins to grind higher. The grinder is the giveaway. I know you guys and gals love these pop and grinds because I get so many emails and comments here on the YouTube channel. These will quickly become one of your favorite patterns. Watch closely. Mark a trend line off the high, bring it down off that low, right? See how I do that? Now, very important. Look left and find one of these prior swing lows and line it up around the low of that channel. This is where the magic happens. I want to get below a prior swing because that's where traps live. You'll learn more about that in the free video course. Get below a prior swing, get below that 21 EMA. The 21 EMA will come over, right? It'll be right there. Get below the 21 EMA. That's where failure patterns live. Failures turn into pullbacks, right? And again, leave that runner because we know where the market wants to go. Now, this could be any of the entry patterns you guys are learning in the free video course. Traps, failures, pullback combinations. If we're lucky, maybe a strength trade as it rips and rotates back higher. That would be a great spot for a strength trade. We'll see if we get it tomorrow morning. And the final variation of this, then we'll grab the Nasdaq here in a moment. The final variation of this is what I call a double bottom retest. In all reality, these are oftentimes the most lucrative pattern variations, so make sure you pay attention. In a lot of situations, we'll get that run lower. We'll get those bears trapped in once, twice, squeeze those stops, right, and make that run higher. But because there's a range here, ranges love to break out pullback. So I would say probably 35% of the time, we get another run going lower, right? This is a winning trade. It is a winning trade, right? It's a one-to-one target. You'll learn more about this in the free video course. Stop moves up to point of entry. So it is a winning trade, but of course, the bears come in and they whack it back down, right back to that low. Now, first things first, do not confuse this. It takes a hell of a lot more than that for this big bull market. Remember that 60-minute time frame? A whole lot more than that for this to be a bear trend overall. In most cases, these retests of these lows, these double bottom retests, are oftentimes a gift to the buyers. Because think of it this way, anybody who sells short right here, they're taking their profit down here, right? They become buyers at that low. So a great spot to once again trap in some rookies, right? Trap in some rookies. Remember, we're not going to pick bottoms, right? And I'm definitely not going to waste my time by reading volume analysis, all that stuff. Indicators, guys, many of you know this already, but indicators are not the key to timing entries. The key to timing entries are stop runs, liquidity runs, as the kids call them these days, right? So again, this is a horrible spot to be selling, right? You don't want to sell down here. But when I was a rookie, I was chasing these things all over the place. I sold things like this all the time. Let my emotions, my instincts trade for me. Bears once, bears twice. And again, guys, once you learn what works, keep on hitting that button, keep on milking that thing until it stops working. These failures into trap patterns, These are money patterns, baby, right? Keep on working them. Keep on working them. Again, this, of course, is a double bottom retest. It's a failure pattern into in this case, a bear trap pattern. Oh, and remember too, when we get that trap pattern, right? Remember, the key to the trap pattern is you want to see separation off the moving average. That is always a giveaway because separation is strength, right? Separation is strength. So failure pattern, pretty simple. We pop up, separate off the moving average, higher high, that strong green candle signal closing above the moving average. You guys learned the entry triggers inside the free video course. And again, leave that runner, right? Leave that runner as we go. All right, boy, I'm getting excited just talking about this stuff. I love game planning. Plan your trades and then trade your plan. Don't trade your instincts the following day. Now, let's talk about if we go higher here, because that definitely poses a slight twist on what's happening here on the charts for tomorrow. Let's grab some Nasdaq and we'll talk about some variations of this. Now, before we dive into the Nasdaq though, if you're enjoying this video right now, if you're getting value with this video, it would mean the world to me if you hit the like button for me, subscribe and set your notifications. And I know you have a buddy of yours that would love to watch these videos as well. Find the link in the video and share the link, of course, for this video with a friend. Every time you hit the like button, subscribe, and share with somebody that could use this information as well, it helps me grow this YouTube channel. So thank you so much for your ongoing support. Thank you for all the likes, subscribes, and shares. Enough of that said though, let's talk Nasdaq here. Nasdaq, of course, is just like the S&P, right? We're bullish overall here on the Nasdaq, just like we saw on the S&P. But again, right, we're not going to use that to time the entries. The entry timing is so much easier on a tick chart because tick charts are based on volume, right? One tick is one transaction. Easier to analyze, easier to find entry patterns. Now, right away on the Nasdaq, you can easily see, right, there is that trading range and the market rotating back and forth. Just like the S&P, you can easily see the amount above, the amount below. This is a great spot for that same game plan we talked about on the E-mini. So I'm not going to go the whole thing right now, but again, we go lower, trap the bears in, failure into bear trap pattern, right? Two-legged pullback. And of course, we mentioned earlier the V bottom reversal, the double bottom retest. So really all the same stuff we talked about earlier on the S&P. The most important thing though is if we start going higher, because now that failed rotation is a really, really big clue. I have three clues or three trades I'm looking for if we end up going higher here. First of all, if this thing really ends up running higher overnight, right? It's FOMC today. Markets are going to read into this overnight, and we may see another big run going higher because remember, all-time highs are still, they are definitely in striking distance here, and that aggressive rate cut, right, certainly may spark a buying frenzy. So if we see a very strong run going higher, I want you to think about two patterns as we go higher. If this thing starts to really rip going higher and separate off that moving average, remember, separation equals strength. We're going to look for that higher high in price and that trap pattern. Okay, that trap pattern. Now, one thing about these types of moves is they like to use measured moves, right? Measured moves. We talk a lot about measured moves in the free video course. So as we go higher here, think about a measured move now, depending of course, how big that first leg going higher is. Think about a measured move now to identify where that final target is, okay? So remember, at this point now, we failed rotation. A lot of bullish clue with that. If we end up now, if we can get that strong run going higher, now I don't want to buy high, right? I want to buy nice and low. This is where ranges are really helpful because ranges, they love to breakout pullback. Now, when I think breakout pullback, I think about that same two-legged pullback we mentioned earlier. And again, it's get under the moving average, one leg, two leg. Remember, we're not going to pick the bottom on this, right? We're going to use that two-legged pullback to give us the general area, right? Two-legged pullback, think about a measured move, a bit more than a measured move. And again, we're not going to pick the bottom on this. It may roll right over again. And I will talk about how to know when to short this thing off the high in just a moment. However, if we get what I think we'll get, right? If we get that strong push up there, all that bullish momentum with the overall bull market on the 60, now we look for that same failure pattern once, twice. I'm telling you, once you learn how these work, you will look forward to these every day that you trade. Remember, get that separation off the moving average, right? Get that bear trap on the way back up to take out those highs. Also, to remember, don't forget, right? Measured moves. One leg, two leg, that will tell you now where to leave that final target. So again, if we rip higher, don't buy high, keep buying those two-legged pullbacks. I don't know how big it will be just yet, but now you know kind of the strategy that I'll use to find that bottom, right? To find that bottom and trap the bears in, squeeze stops, and back up to retest the high. One thing I'll be watching though for us, one thing I'm watching, you noticed earlier we had that triangle, right? Those triangles coming out. That triangle high, that triangle low. If we wind up above these highs right here, if we wind up with these highs here, again, we're not getting that higher high, that separation moving average, right? If we pop up and I start seeing buyers struggle up here, I'm gonna look for a bull trap pattern. Now, bull trap patterns, I call these crown reversals. They're basic reversal patterns. They're basically bull trap patterns. Look what happened over here. Look right there. We go up, we pull back, the buyers try once. We go lower, the buyers try twice. Look what happened in that area right there. That is a bull trap. It's a lower low in price, a break right above that high. I have a ton of examples of those inside the free video course. So same pattern, right? Same pattern, but do it over here. We go up. Again, we're not seeing that blast. We're not seeing that continuation we mentioned earlier. Now we pull back now. The buyers try to keep it going, but they don't, right? They don't. They fail to get that higher high, that good separation, and we go lower one more time. This is a potential bull trap. It's a lower low in price. Why lower low? Because I trap in the buyers, right? Buyers are going to buy as it goes lower. So trap them in. Why trap them in? Because I need those stops. I need, once I get that strong red candle closing below the 21 EMA, if you're long, right? If you're long in this area right now and you see that big juicy red candle, for most people, you're bailing on this thing, right? You're going to get out before this thing takes your face off, right? So all those buyers with their stop sitting right there, they see that big juicy red candle, they're getting the heck out of it. And how do you get out of a long position? You sell your way out. That fuels the move right back down again. And once we get down here, what do? We trap in the bears, right? We don't sell down there. We trap the bears in. 1, 2, we follow the game plan we mentioned earlier on the S&P. This is a crown reversal. It is basically a bull trap pattern. Now, every once in a while, we go up and there's so many bears up there, it gets whacked back down, right back down again. How do we trade a V-top? We look for that pop and that grind. Most V-tops or V-bottoms have some sort of grinding motion to them because what happens is the buyers realize it and they start bailing, right? When the buyers bail on it, it kind of grinds down like that, right? So all we do is mark off that low, mark off that high, and repeat after me. First test is the best test. What I'll do is I'll look left, find some prior swings. And all I'm doing here is I'm looking for a prior swing that lines up around the high of that channel. That is usually where the money is made on these moves going higher. And again, this could easily be a bull trap. I'm showing you here, it could be buyer failure pattern, pullback combination, maybe a strength trade if we have enough space. We'll talk about that more tomorrow in our trade room. Now, very important, the amount we go above the range, the amount we go below the range. Recency is really important, right? So if we go up and back down again, I'm not going to worry about this larger one anymore. I'm going to focus more now on the most recent one, right? So recency is important. That will tell you now where to put that final target. It'll also tell you now where to go out and begin to trap in those rookie bears who are chasing after it from there, right, guys? That is the game plan. Again, if we really sprint and run higher, two-legged pullbacks, right? Two-legged pullbacks, or do we run up and start seeing them struggle here with the bull trap, right? Or the V-top and rolling back down. Of course, we have that game plan set up to make profit off the low as well. All right, guys, that's the game plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come trade this stuff with us. I know this stuff is difficult to learn all in the video, but I'll tell you the easiest way to start making money in these markets is to learn and trade along every morning in our trade room, 8 o'clock Eastern time tomorrow morning. I'm going to put all the important links you need, the description of the YouTube video. Start first on the free video classes, learn the roadmap. Everybody loves the free video course. I think you will as well. Any trouble getting started, any error messages getting into it, right? Definitely hit us up on live chat, or you can always call the office. Megan and I are always here answering calls, helping people into that free trading course. Right, guys? Hope you learned a bunch in this video tonight. Hope you use this knowledge to make a killing tomorrow morning, and hopefully I'll see you sometime soon trading with us at the opening bell in our trade room at 8 o'clock Eastern time. In the meantime, be well, be nice to each other out there, and be here next time, will ya? Adios, amigos. Bye for now.